Okay, let's dive into the Greater Toronto Area's real estate market for the first quarter of 2026. What we saw was a market getting pulled in two completely different directions. On one side, sales were recovering, but on the other, prices were still pretty fragile. So let's break down what that really means for you.
This quote just perfectly captures the market's current vibe. It's definitely not the wild frenzy we saw back in 2021, but it's not frozen solid either. It's this selective, kind of disciplined market where having a solid strategy is everything. So let's unpack what that really means, and we'll start by looking back at January. So we're going to start our journey in January, which, to put it mildly, set a really weak baseline for the year. It was a frigid start, for sure, and the numbers tell that story loud and clear. Right off the bat in January, total home sales were down a staggering 19.3% compared to the same time last year. I mean, that's a huge drop in activity. It really shows you just how hesitant buyers were as the year kicked off. And it wasn't just the number of sales. The average selling price also took a real hit. It fell 6.5% year over year to just over $973,000. So you've got fewer sales and lower prices. That's a tough combination. Now this one shows the underlying trend even more clearly. The MLS Home Price Index, which is a much more stable way to measure a home's actual value, was down a full 8%. This basically confirms that the price weakness was real, not just some fluke based on which homes happened to sell that month.
So when you put it all together, this slide just paints a super clear picture of January. Sales were down almost 20%, prices fell, and, this is critical, look at that bottom row. The average days on market jumped by over 21%. Homes were just sitting on the market longer, which really signals a very hesitant market to start the year.
But January's deep freeze wasn't the whole story. Not by a long shot. As the quarter went on, we started to see some clear signs of a spring thaw, with momentum really starting to shift. You can see a clear narrative right here on this timeline. I mean, look at that. Sales volume just climbed steadily each and every month. We went from just over 3,000 sales in January to almost 4,000 in February, and then we blew past 5,000 in March. That is a definite shift in momentum. But the real question is, where was all that activity happening? Well, this chart shows a pretty fascinating split. In March, detached homes significantly outsold condo apartments. We're talking more than double the sales volume. This points to a really clear preference in the market for more space as buyers started to come back. And of course, location continued to be a major factor. This slide shows a persistent price gap between Toronto proper, the 416, and the 905 suburbs. On average, you were still paying a pretty big premium, about $80,000 more, to buy in the city. And when we dig a little deeper, this price difference becomes even more dramatic. A detached home in the 416 commanded a premium of almost $400,000 over one in the 905. Wow. Now, the gap exists for condos too, but it's that massive premium for detached homes that really stands out. Location still matters a lot. So, okay, what do we have? We've got rising activity through the quarter, but prices are still down from last year. We're seeing these clear preferences for certain home types and locations. So, what does all of this mean for the big picture? I think the cleanest way to frame it is this. The market is tightening up. Demand definitely improved as the quarter went on, but, and this is a big but, it's not healed. Inventory is still pretty high compared to previous years, and that means it's not a true, full-blown seller's market just yet.
Now, we really can't talk about market conditions without talking about the biggest factor influencing affordability right now, and that's interest rates. To understand where things might be headed, we got to quickly break down the key driver behind your mortgage rate.
All right, so the Bank of Canada policy rate, which was sitting at 4.5% all through the first quarter, is essentially the wholesale cost of money for the big banks. It's the rate they charge each other for overnight loans, and it basically sets the foundation for all other borrowing costs in the country. So just to be clear, it's not the rate you pay on your mortgage. Think of it like this. The Bank of Canada sets the wholesale price. Then, the commercial banks use that to set their own prime rate, and finally, they add their own profit margin, or their spread, to get to the final retail price, and that's the mortgage rate you actually pay. Okay, so understanding these dynamics, the recovering sales, the fragile prices, and the whole interest rate environment is absolutely key because it directly impacts your strategy, whether you're looking to buy or sell in this market.
So for buyers, whether you're a first-timer, an investor, or maybe looking to downsize, the key takeaway is that this is a market that rewards being selective. You still have some negotiating room, especially on properties that might have a few flaws or have been sitting around for a while. But that window for deep discounts on prime, well-presented listings, it's definitely closing. Just throwing out blanket, low-ball offers is not the winning strategy here.
And for sellers, you have to balance that optimism with some discipline. Yeah, activity is up, but supply is still heavy. And that means you don't have that broad pricing leverage just yet. An uptick in sales does not mean we're back to 2021 conditions. A smart, strategic approach to pricing and marketing is still absolutely crucial.
All right, let's bring it all together. After sorting through all this data, what are the most important things to remember from the first quarter of 2026?
This slide really brings all the key takeaways together. We saw a solid recovery from that deep freeze in January, but the market is in this really delicate balance. Sales are up, but prices are still down from last year. We saw clear strength in detached homes and in the 416, but the bottom line is that this is still a very disciplined market where having a good strategy is paramount.
And this all leaves us with one final crucial question. We've got two opposing forces here. Rising demand is pulling the market tighter, but all that elevated supply is keeping a lid on prices. As we move forward, which one is going to win out? Will rising sales finally absorb all that inventory and give sellers the upper hand? That's the key dynamic we all need to watch.
This analysis of the GTA market was prepared by Olivia Williams. Thanks for joining us.